Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick with you this morning. Retail earnings season, we knew it was coming. We didn't know it would be this interesting. At least I didn't think it would be. Target delivered apparently the best quarter in the history of quarters. Nordstrom, not so much. We also had Urban Outfitters and Lowe's to talk about. L Brands after the bell. We're going to talk about the FTC case against Qualcomm hitting that stock this morning. And we'll go over some recent insider buys and just highlight when insider buys can jumpstart a stock. Our guest today, Angie Setzer. She will join the show at 8:35. She is the vice president of grain for Citizens Elevator. Has not been on our show in far too long. Commodities expert. We'll talk to her about that space. Again, that'll be at 8:35. In the meantime, Joel, what is the word here overnight?
Red. Got some red here in the S&P futures. We're down 11 3/4 handles at 28.54 1/4. Made a run at Tuesday's high at 70.75. Came up just shy 69.50. Pre-market low 52.75. So we're through the intraday low from yesterday. Our next target, important level on the downside, is Tuesday's low at 46.50. Currently trading at 54 1/4. Crude still the trading range, down 64 cents here at 62.49. Kind of quiet. Got a pair of highs to contend with, actually 3 highs to contend with, just under $64. So we'll keep an eye on that. Gold up 240 at 1275.60, trying to hold that 1270 level again. We've been in a trading range from pretty much from the month of May in gold. Silver up 3.5 cents at 1444.5. Bitcoin 8,000. That's a big level here. Your resistance in the Bitcoin futures, your current high 8,075. So we'll see if we can clear that 8,000 hurdle. Let's bring in Triple D. And you managed to find some action last night and a few different stocks, right?
I always find action in a few different stocks. This one was interesting, though, and this one took me very much by surprise. You know, I trade headlines. I'm a headline trader. Headlines break, I trade headlines. ASCMA basically goes Chapter 11 headline last night. So you automatically think, okay, probably stock's going to go down on that headline. Doesn't sound like good news.
Zero. It's a zero.
It's a potential. It's probably going down. Sometimes they don't go straight to zero, but they usually go down on that news. So I throw out a short. I'm one of the first ones. I actually think I was the first one. You can't hit the bid because it's got the 10% rule going. So stock move more than 10%. So you can't hit bids to get short. You've got to be lifted on the offer. It's a silly rule in my opinion, but I've talked about that before. Anyway, so 85 cents is bid. I throw out, my order automatically goes to 85.01 because it can't hit the bid. So I'm sitting there trying to get short 85.01. Whole pile of people join me, a few seconds later because this headline, stocks went Chapter 11. So 85.01 gets bigger, 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 bigger. It sits there for like 10 minutes. It grows and grows and grows. Nobody can hit the 85 because nobody can short. You have to have somebody who's actually long the stock hit the 85. It's the only person that can hit the 85% bid. So anyways, I sit there for like 10, 15 minutes. Finally, because I'm first too. So I'm thinking, as anybody upticks this, I'm going to get it. Finally, somebody actually lists the entire offer, 85.01, in one blow. I think you were saying, what, 40,000 shares?
Yep.
On that time?
Yep.
And then they lift the 87 offer too. And they had like 7,000 shares, like 50,000 shares worth. I'm looking at this and I'm like, they're going to squeeze us. Right away, like not even hesitation. I'm like, they're going to squeeze us. And so what I do at that point in time is I immediately lift the 94 offer. And 95 and all the way up to $1 because I had some shares. So I couldn't get out one shot. So anyway, so I go out. I think, I got the bulk of it at 94, 95. And I'm looking and it didn't do much for a bit, but I was like, did not want to sit in this. I was willing to lose my quick 10 cents on this, 10 and some of it 15 cents. Because, and here I am, I'm lifting offers because I'm looking at the book and it's so thin. I'm like, if 50,000 shares want to cover here, it's going to go up a long ways. What happens over the course of the next half an hour? This thing rallies to $1.85. So I'll pat myself on the back for being able to identify the coming squeeze very, very quickly and not obviously get squeezed along with them. Didn't make money, but didn't get slaughtered either. Thing goes all the way up. If you look at the chart, you can see it there, up to $1.85 last night, as everybody who was shorting that 85.01 and 87 cents with me got, the hell squeezed out of them. And now it's back down, and it's come back down here, and it slowly leaked down. But that didn't help anyone who was short last night, probably thinking, thoughts of PCG in their head, thoughts of, what did I miss? What is the news? So anyways, it just goes to show you fundamental news does not always matter. And sometimes in these really thin stuff after hours, squeezes can happen even after hours. That was a classic short squeeze right there to everybody. You can see the people who got squeezed. It was those 50,000 shares, which I was a piece of those at 85.01. So that's just classic tape reading, saving me money there. And I mean, these are skill sets that obviously over 20 years of prop trading, you get. I read that immediately. I looked at how thin the book is why I subscribed to all the books, so you can kind of get an idea. I'm like, they could really squeeze this, and they did. It's come back in now. The trade's over, but I just wanted to show you a classic short squeeze on a stock that had very bad news.
But went all the way up to $1.85, I believe, and pretty good volume now coming back. So
it's
now,
probably the 50,000 shares worth of volume going up. Add them all up. So everybody that was selling 85.01 puking their guts out.
So are you done with that stock? You're just like, you're done?
I think the trade's done now. I mean, I don't think it's going to get squeezed here again. It was the squeeze last night because it was thin buck, and they knew they could spook us. And they did. They spooked me very quickly. I'm glad I got out quickly. And it's still trading $1.09 here this morning. So it is still a little bit higher, but there's no way in the world. It's still up 20% on bad news. And it's a little bit. So, just because a stock goes bankrupt doesn't necessarily mean it's going straight to zero. And just, in the PCG case, and in some of these cases, they don't go to zero. We've learned that through PCG. So you automatically think chapter 11 equals zero. It's not always the case. It wasn't the case with PCG, and it definitely wasn't the case, at least with this stock last night.
Hey, listen to this. I think Michael Pellini here in the Google chat, I think he was listening in on the pre-market show, Dennis, because he wants our thoughts on 3M.
You know what? The stock, okay, if your time horizon is 25 years, let's just seriously say, and my long-term portfolio, my time horizon, say I'm 43 now, time horizon price 65. I got 22-year time horizon. I think 3M's a good deal here. 3.5% dividend. You're buying and trying to catch a falling knife. If you're a trader, there's absolutely no reason to be long this thing. If you're a long-term investor, I can't argue with it. I think it could go to 150, but you do have a couple lows back in 2016. We were looking, we got to go back a few years in this one because it's been beat up that much. $165 and $163. You had those couple lows. I think we go down and test that. Maybe you take a shot there. Maybe, as a long-term investor, you start nibbling here. I don't know if there's any reason to go all in on it because the stock trend is so bad. The market isn't in great shape here either. But I think it's getting to a point where it's actually starting to get some decent value for you long-term investors out there.
All right. Low of the move, 165.61. You got a little smidgen of a green candle yesterday. It's thrown a couple head fakes in there before, though, during this major decline from 2. You talk about a gap and go, and that's just institutions just saying, I'm done with the stock. I'm out. I'm going to keep selling every single day until I'm flat. 200 to 190, 190 to 180. 165.61. If you look at your monthly charts, which we have to do when our stocks make these kind of moves, you do notice that you had a low at 163.85 and 165.11. And this was back in October and November of 2016. So if you're trying a little swing trade, yeah, you can lean on that, but new low, you got to cut it out. And I think I'd be more comfortable. There has to be a point when there's 3, 4, 5 lows, let's say within a 50 or 60 cent range. That is when, the institutions are coming in. So long-term buy, short-term, leaning on that.
So many lessons to be learned from this, though. First, on a stock that has bad earnings, being the hero on buying on day one typically doesn't work. And in this case, it was very, very bad. Think about Intel, same story. Bad earnings day one, it was the sell point because you know what? It continued way down, and the back half of the move was worse than the first part of the move. 3M, the same story. Almost the back half of the move on a percentage basis is probably worse than the first part of the move because he dropped to 25 points. Now you've dropped another 23 or so since then, but it's at 190 compared to 220. So for a percentage basis, the back half of the move, the earnings leak, you could call it, after the bad earnings day, it was worse than the first part. So buying stocks on bad earnings on day one is typically, and I mean by bad earnings, you can look at a Nordstrom here today too, JWN, and it's been leaking for a while, but so, obviously every stock's its own story to a certain extent, but I mean, it's tough when you're buying stocks that are guiding down. Institutions don't all sell on day one, and sometimes that selling pressure continues. And in 3M, it's continued for a month. In Intel, it's continued basically for a month. So yes, the market hasn't helped, but that being said, these stocks, disappointed, and those disappointments obviously continued to be sold even a month later.
And boy, Michael Pliny picks us up, and then Spinner mentions, this is another thing we were talking about on the pre-market show. There's been some insider buying, and I don't know how much in Triple M over the last few weeks. And you were talking about that as being a catalyst and for stocks.
In certain stocks. And we saw it in CVS. The first time we had a few insider buys, the stock really ripped. This was late April when you saw some insiders coming in. And when stocks are in the gutter, when they're going down and down and down and down, finally they get that vote of confidence from a couple of insiders or from a major insider like the CEO or the CFO. Sometimes that can turn the stock around. Overstock yesterday. And I don't know if we talked about this on the show. I don't know if we got to it, but I talked about it on the pre-market show. I think we just glazed over and didn't. But I bought this overstock, OSTK, would have been the Wednesday night at $9.90 because there was a big insider or a pretty decent size insider purchase. It wasn't huge, but it was the first insider purchase we've seen in a long time. Like that could kickstart the stock. I even said it to one of my buddies over at Bright. I'm like, that could kickstart the stock. So I picked some up at $9.90. Obviously, the scalper blood in me, I got out way the hell too soon. I did not see it thing going to $11 on that. But anyways, I think I was actually the first person to buy it because I actually bought some at $9.83 and I bought at $9.90. So I'm a headline trader, headline breaks, and sometimes I'm pretty quick. So and that night it ended up going up to 10, I think. But with the weakness in the market yesterday, I don't think we mentioned on the pre-market show, but we did mention it. I did mention it to you guys on the pre-market show. But anyways, the stock opened at 10:30, went leaked to 10:05, and then went straight up to 11:44. And this wasn't a tape that wasn't that great there yesterday. I mean, yeah, or I guess it was okay tape. We did go back, but it shows you sometimes those insider buys can really turn stocks around. One that we saw last night, I could not get this, I tried, was ELY. So keep an eye on this one. Had a couple insider buys there last night. Stock's been in the gutter. And it's bid up here this morning at 15, a couple odd lots trading at 15.30. But, don't, crazy on these things and pay way up for them. But if you can get them on the cheap, we got a week, day here this morning. These could be a stock that turns it around. Another one, I don't follow this stock at all, but it was an insider buy there too, was WTRH. It's just a classic setup here because the stock has been straight down. And I mean, this is ugly. $14 in March. It's $6. $6.85. This one had some insider buys there last night too. Now, if I could get this at like 690 or 695 today, maybe in a week tape, maybe this is one you take a shot on, because maybe this is one that can turn around quickly. But, the stocks are weak here this morning, so I don't pay way up for anything here today, because obviously the overall market is weak. But keep an eye on these two stocks. They could have the potential. Nothing works all the time, but they have the potential to pull an overstock.
All right, let's this is a complicated question. Maybe we'll save this one for later.
JB Speck said he played the overstock yesterday too. He played it a lot better than I did. He played it the entire day. He said he bought it OPG opening and sold it on the close. That was an awesome trade. I'm all over the early part there, JB Speck. It's the MOC part that I'm not. I hold for like 20 minutes and I'm pretty happy that I made some money. Scalper blood me. I need to hold those things better. So if I would have held all day, I would have made a lot of money on it. Obviously, I couldn't hold all
day. Queen of Lice wants to know how you determine your trade.
Queen of Lice?
It likes.
Oh, likes. Like Queen of Lice.
12 million.
That'd be a wicked handle.
527,923. Queen of Likes is the name. That
okay, cool. What's the question?
How do you determine your trade size, average volume? do you use average volume?
So it's saying, does my trade size vary from stock to stock? Is that what?
Like how do you determine? Like when
Well, I want to be, so this is the way I kind of look at it, is I don't want to be big enough that I'm seriously moving the market. So I try to get as big as I can, usually without moving the market. So I don't want to be like in a situation where I can't get out of a stock because the liquidity isn't there for me to get out because I'm too big. Then I'm an institution and then I'm too big. So that's kind of how I look at it. I want to be big enough that I make some money, but I don't want to be too big that I'm actually going to have price impact, a serious price impact. We all have a little bit of price impact, but serious price impact when I'm coming in and out. So I try to get as big as I can usually if I'm convicted on a call. I mean, sometimes I enter, if I'm not, confident in a position, I might enter with a half size or a quarter size. So on that 3M, from an investment standpoint, taking my day trading hat off, putting on my investing hat right now. On 3M, if I really liked it, I might buy like a quarter of the piece or a third of the piece right now because it's still going straight down. It's still pretty ugly, and that gives me a chance to kind of like the Kramer play. But that's long-term investing, saying I got 20-year time horizon on this thing. I think the stock's just too cheap now. From a trading perspective, it's different. Trades, I go all in usually right off the bat. I mean, I'm putting my money in because I think the stock's going to be good. That overstock on that, I buy everything I can. On that, it was thick enough that I'd probably bought them all. So whatever was offered there, I probably bought everything that was offered. There wouldn't have been that many offered there at $9.90. I don't know what was offered there, 1,000, maybe 2,000. There wasn't much offered there. So I can't remember. It's like going back 2 days ago. I don't remember how many shares I bought. But I a lot of times, if I really like the news and I'm a big enough trader, I'll buy everything that's there if I think it's good. I buy it all. So so if there's, and that's after hours pre-market. So obviously during the day, there's all kinds there. But if, there's like 2,000 shares offered there and I really like it or it's got good news, I'll try to buy them all right away. Boom, 2,000. And you can't even go like 1,000 because then the news algo's sitting there and he's watching too. And if you take 1,000, the other 1,000 will go instantaneously because then they notice it. So there's like an algorithm that runs. It's like the smartest program after hours. And if you lift an offer and it's got like positive news, it's got like a headline and you lift the offer, it automatically takes the rest of it. It takes the whole thing. So if there was like 3,000 shares offered and I take 500, it'll take the other 2,500. It's really smart and it's very decisive. It knows when it's good news, bad news. Because if you did that and did it on bad news, it wouldn't do it. So it's funny. It's like it almost like doesn't want to be the first one. But when somebody makes the call, it says, okay, that means somebody made the call. This is informed money lifting this offer. Now the program will read that as informed money and take the rest of it. Really smart.
All right. RNH.
So I beat around the bush to answer that question in 3 different ways.
Yeah. RNH says, so you don't have a specific risk unit for most trades? I think it's the opposite. You have
I do. I don't want to get too big that, am I going to go throw $1 million on one stock? Probably not, because you're never going to, I never want to have, I never put more than, I stay fairly diversified. I'm trading prop money here too, guys. So, we got some pretty big bucks we can play with, but I never want to put really of my own capital. I never want to put more than 5% in any one investment. So if I had a $500,000 account, this is very hypothetical here. Let's just go to $1 million. Say, you got some, pretty, rich, we got some rich traders out there. Say somebody has $1 million account. I would never throw more than 50,000 in any given investment. And that's from a trading standpoint and an investing standpoint. I like to stay diversified in my long-term stuff and my short-term stuff to a certain extent. So if I got $1 million, maybe my average risk size is going to be 50 grand. If you're sitting with, 100 grand, maybe your average risk size is going to be 5 grand. I mean, at a certain point, you can get a little bigger. If you're really small, like if you only got $20,000 account, you're going to put $2,000 on something. Probably you got to maybe up that a little bit, but at a certain level, I think 10% max in any given trade, because you know what? Bad news can happen. Stocks can get halted. Things can happen overnight. You don't want to, one of these trades to really hit you so hard that you can't recover from it. So, I see some people and say, oh, I'm a margin all the time in one stock. What happens, if you're 2-to-1 margin, stock gets called or stock gets halted, goes down 50%, you blow out your entire account. I mean, so I always want to stay somewhat diversified, even in my trading portfolio. But in my investing portfolio, it's typically about 5%. So 5% of my, overall account size would be, as big as I'd want to get on any individual stocks. And I adjust that because, like stocks like MasterCard, my long-term portfolio, that start taking it over and they start getting up to 6, 7, 8% of my portfolio. I start to sell them just because they're getting too big. And that's just because the trade worked, the long-term investment worked. And MasterCard went up so much, from when I was buying at $16 years ago to $255, that if I still had it all, it'd probably be like 20% of my portfolio now because it just went up so much.
One last question here. We're doing a lot of education today. How much weight do you guys put on volume when looking at daily charts? High volume, good; low volume, bad. I look at it like when a stock has an extended move, let's say an extended rally, and I'm thinking of shorting it. I'll see like the big volume, like just if the volume and it starts to dry up, like Beyond Meat or something like that. It had a big volume day and then it starts to taper off. And then you're thinking, who else is going to buy this stock, right? At 80, 90 bucks. So I look at more of the trend in the volume when I'm looking at things, just to see if it peaks and valleys or just kind of evens out. The days of having the big volume down day, and you're looking at something like or 3M had that huge volume down day and you're like, oh, all the sellers are out on that one. I don't subscribe to that theory, but I do like to keep an eye on the volume. How about you, Dennis?
I look at it just as, and this is really what I'm looking at is, what's the liquidity? Am I going to be able to get in and out of this thing? Am I going to go trade something that trades 1,000 shares a day? No, because I'll never trade that stock because I can't get in and out of it easily. This is why the small cap space is a complete mess, because no institutions are going in there because they're going to be 10 days of volume trying to get in, 10 days of volume trying to get out. They can't get enough money in and out. So that's why the major stocks are picked on so much too. I mean, because you can get, I love trading AMD. I trade it every day. Why? Because I can get in and out within a penny. There's always got a penny spread. Even after hours, it's typically got a penny spread. So I can get in and out more easily. So that's why I like trading the liquid stuff, because I'm a small fish in a big pond there. When I go to the little stuff, all of a sudden I'm the big fish. Well, the big fish, it's hard. And you can say, oh, I want to be the big fish. But no, you got to move in and out easily. And the big fish move price. And then you're giving up. If you've got a little bit of alpha, you could give it all up in price impact. So I typically stay away from the really, really thin stuff unless it gets some action. And then I can get in and out more easily. But I'm looking at liquidity. How easy can I get in and out? How easy can I move, my stock trade order in and my stock trade order out? Or is it going to take me 2-3% to get out? I'm not interested in that. I don't want to give up that much edge. The other question and we're going to get to these stocks, Qualcomm, Lowe's, we know all of them all. We're going to get, this is just a little bit of educational that we're talking about. RNH was asking just about my stops, and I didn't notice this question. So maybe I when I was answering, how big a size I put on, what would my stop be? Okay, if I'm trading headlines, my stop is almost zero. If I'm trading headlines and the stock starts going the other way, that means I read the headline wrong. So if I'm trading headlines and I think it's good news, like last night on that ASCMA, I traded that. I was short and I read the headline as being bad news, which I still believe it was. But you know what? The order, reading the order flow and reading that one shot print makes me think, oh, I'm in trouble here and I'm going to do whatever I can to save money and not get really killed on this thing. So that's why I cover quickly. But typically when I'm trading headlines, if I think it's good news and the stock starts going down, that means I'm wrong. So on headlines, it's almost zero. Now, on swing trades, you typically give yourself a little bit of room. I did a QQQ swing trade yesterday. I was trying to play from the short side. Q's opened up and they puked a little bit right off the hop. If you look at the chart, they did puke right on the opening tick. And then they came back up and they were fooling around with where the opening price was. I was like, well, maybe it's going to stall out here. So, I give myself to that open. So I'm setting pricing points based on, different events too. And usually the open, maybe it's what the closing price was, is different things. So I would say it varies depending on the trade. So on headlines, I give myself almost zero because you don't want to be on the wrong side on a headline stock because it can really move quickly. Sometimes you just can't get out and, the slippage is going to be huge, but you do whatever you can to minimize the damage. But on, a typical swing trading setup, maybe I'm risking $1. I'm trying to go for a 2-to-1 or 3-to-1 risk reward. I'm setting those little trades up, when I'm doing it. So, and then long-term investing, it's still a whole different animal. I typically don't use stops. It's when I think the story is broken, like Tesla, the story I felt was breaking. That's why I sold it out. So it's different. So it varies from stock to stock.
Very subjective. All right,
Very
let's go.
subjective.
We do got some stocks moving here, and Dennis, we got to cover Qualcomm here.
Yeah, and my portfolio has been completely under attack. This is my long-term investing portfolio, my 20-year portfolio. Well, I screwed up on Qualcomm. I put it back in there, and I obviously shouldn't have. We've had two bad headlines. The Huawei headline knocked down and obviously beat it up, and now this headline overnight, and it's like, oh, come on. So, you know, I'm going to be in it. I'm in it. Disappointed, obviously, but, you know, it is what it is. You got bad news that hits your stocks, hits your portfolio. It happens sometimes. My time horizon is long term on this. I'm sticking with it. But anyways, give us the headline news. Anybody who's got this on for a trade, it's ugly.
So it's an antitrust case with the FTC. They're obviously going to appeal. So this is not the end of the story here. But the story that the headline today is that U.S. District Court ruled against Qualcomm and for the FTC that Qualcomm will need to now go back and renegotiate their licensing agreements without.
What's going on here? We're just making another new low in the. Sorry about that.
There's a headline. There's something that just happened.
Go ahead, Spencer.
No, it's okay. But Qualcomm is going to have to renegotiate their licensing agreements.
It's getting ugly.
And they also cannot sign exclusive supply agreements with smartphone makers like Apple, which, of course, they just settled that a few weeks ago. So that's the headline on Qualcomm this morning. Let me see what the headline is on this market.
Yeah, I mean, it was just about a 4 or 5 point dump here, so that's not over yet. So new low in the pre-market here. 46.50 is not out of the question. That was Tuesday's low. That's what I got as a 2-star here. Under that, it's a slippery slope down to 28.32.50. So 46.50, we're bouncing right back. That just may be Mnuchin says no plans to go to Beijing. That's coming from Hunter 69.
Trade wars continue.
Trade wars. All right. So this Qualcomm. All right. Someone in the chat said they had some 77 puts. So congratulations, because those deep in the money. If you're waiting for your gap fill on this one, you got it. You had a gap between 71.03 and 76.49. So there's your gap fill if you were waiting for that huge day. I look at the pre-market low, and I'd see 67 even is the pre-market low. So what I'd like to see for those 77 puts, I like to see it get down to 67, take out 67, and then work on that big old green bar that it had. That was a wild day. Also, 70.45 was the close after the run from 57.18. So 70 could be, attract some short-term buyers, but in order to get more on the downside, you want to see it take out 67, and then after that, there's no number until you get into the lower 57s, and I don't think that's going to happen today. But first things first, take out that pre-market low and get into that green bar. Dennis, any thoughts on Qualcomm?
As a long-term investor, if I wasn't in it already, I'd probably buy it here. But just because I was played it already a couple of times, I played it from 50 to 75. I played it from 50 to 70. And then I, for whatever reason, decided that I was going to continue to go higher and bought more back at 84. So I shouldn't have did that. I could have been playing it again. I would love it to get back down to 50s, and I would actually add to this. I don't think you're going there, but I don't know if there's any reason to be a hero here either. Stock's got some bad news. It's in a doghouse. Maybe wait till it stops going down.
Okay. All right. We have about 30 seconds here for imbalances. I'm sure we'll get a few sell imbalances here with the S&Ps down 15.5 handles. Should we do Target and then go to the imbalances?
Yeah, let's do it. I say Target reporting first quarter earnings this morning, and it was a good quarter. Q1 adjusted EPS for Target $1.53 versus $1.43. Estimate sales of 17.6 for $17.5 billion. Their fiscal year and Q2 EPS guidance was in line with estimates, and they said that online sales last quarter rose 42% on a year-over-year basis. So well done.
That's an unbelievable number, 42%. they're going to be, all I have to say is next quarter, they're going to
So
have.
give me that number again, because imbalances are coming out. Give me this information once again, just the end of it. What did we say about 42%?
Yeah, online sales last quarter rose 42%.
Yeah, okay. We can say it's an unbelievable number, but they didn't have a hell of a lot of online business they're coming from. So it's just starting to expand. So when you're expanding a business, it's going to grow very quickly there. I mean, let's just say your online business was, whatever. If you're just starting an online business, it's going to grow like crazy off the hop. So they know they got to get more competitive with Amazon. And Walmart, obviously, has a big online presence here as well. So, I don't know what that compares to. I don't know what that number is. I don't know what their sales online comparatively to Walmart and Amazon is, but Walmart and Amazon have a huge online presence and Target needs to get there. So I'm not surprised that they're expanding that. But that's good news. I mean, it's good news that they are expanding that business because they have to be able to compete with the big guns. It's a nice pop. It's a good pop. Retail is in shambles. I mean, and it's not every retailer, but a lot of retail stocks have just been absolutely ugly. So now you get this huge lift in a sector that really isn't performing that well, although Walmart has held up well. Just caution. People coming in here and buying at 77. This could be one that you look at in a month and it could leak it or maybe give it back. I don't think it's giving it back here today. I don't think this is going to turn around and pull, one of those like what was that one, Children's Place, where it was up in the pre-market and then turned around and went hard red. I don't think that's happening here, but I'm not buying a stock in this tape up 7%. I'm not buying any stock in this tape up 7%. I'll just say that.
What happened on April 25th? You had a big old drop. Was that some market? It went from 81.74 to 77.12. I am looking. I don't see anything on the chart in pro on that. Was that just a bad day in the market? Do you remember?
What are you talking about? Which day?
What day?
When Target went from 81.74 to 77.12.
What day was it? April 25th?
Right, the day before, night before. What was that?
No, I don't know.
Gotta be a headline.
That was when Amazon announced 1-day delivery.
Yeah, you know what? I traded it that day, and I even talked about it on the show. This is exactly what it was. That was Amazon 1-day delivery, and I'm like, this is gonna hit all of those, and it hit Walmart that day. If you look at Walmart went down from 104 down to under $100, and Target was really hit hard. So that was interesting. So
great level here for you long Target traders. After that bad news, you had a trio of highs in the, let's just call it 78.30 area, 78.04 to 78.46, encompassed 4 highs after that, and then it continued lower. We haven't been able to get there yet. So far, your pre-market high, well, 78.29 it got to. So I tell you, 78 to 78.5. If you do get back up there, that's going to be super extra major resistance. If somehow it can bust into the 79 handle, you have a gap to fill up to 81 and 81.65. But to me, those 4 highs are just big resistance. The fact that it went over it during the pre-market trading is now leaked. So I like that as major resistance. Where support is this thing? Since making that high, you have found some pre-market support at 76.20. But that's nothing major because things really open up on the downside after that.
All right, let's take a pause on the earnings here because I want to bring on today's guest and someone, a longtime friend of the program, but she has not joined us in quite a while, and that's Angie Setzer. She is the vice president of the Grain for Citizens Elevator, and she is, I guess you could say, she's our go-to commodities expert. And I think Joel wanted to get her on to talk about peas. Something with peas. I'm not really quite sure what's on his mind.
My pea theory.
But pea theory. Angie, are you with us?
I am. How are you doing?
Good. How are you?
Good. Ready to rock this morning. I haven't had to be on in quite some time because commodities have been dead. So it's been China, and nothingness for quite some time. So here we are.
All right. And first of all, Angie, I just got to tell everybody that you met your husband, the king of corn, Carl, on our show. Brianna, producer before Spencer, had you guys on the show because you both follow the commodities markets, and you guys ended up meeting from our show and getting married and having a son here. And I'm still,
as you can tell, because my office is a multi-purpose room. Between 6 a.m. and 9 a.m., I work remotely from half of my son's bedroom, basically.
All right. So I originally picked you because I'm just looking at this Beyond Meat, right?
Mm-hmm.
And so I'm thinking, wow, this stock is really going up. It's actually started to go down lately. And I'm like, where are they going to get all those peas to make all those products, right? It's like being you, and you're like, that's a very good question here. So I don't think I want to go long Del Monte, though that's had a little bit of a rally here. Talk to us about that. Talk to us. I mean, do we import, or where we get all our peas from?
Well, I think we're going to end up seeing a good amount of increased production. I mean, I think they would have to imagine, or I would imagine that a company like Beyond would have already kind of worked to source their supply. I mean, I haven't done enough accurate research to be able to sit here and say that I'm the expert on how that's going to work. But, you know, it is a good opportunity, you know, and it's kind of a fine line for someone in agriculture to tread, where it's like, okay, well, you know, I prefer beef, and, you know, I'm a beef burger type person, but it's nice for our farmers to have something else to grow. And so there's a lot of ground right now that's not necessarily profitable when it comes down to it, when it comes to corn, soybeans, or wheat. And so it would be a nice option for those local to the Beyond Meat facilities to go ahead and, you know, grow those products. It's going to be really because of a logistical thing. You know, peas are not something, and I'm not sure if they use them once they're processed, and maybe you've looked into it to see, are they dry? Are they fresh? How are they, you know, how are they used exactly? And, you know, so that'll have a lot to do with it, because peas aren't really something that you can grow in Montana, that's just a hypothetical state, just because it's the first one that came to mind, but and transport them to Indiana easily. You know, they're really something that, for us growing up, we grew peas on our home farm for Gerber, and we were about 65 miles away from the Fremont facility that Gerber created baby food in. And we were about as far as they would go, just simply because you harvest them. The equipment there's special equipment that has to be used for planting and harvesting. And then transport is basically the fresh pea taken to the factory, processed, and then, you know, made into the product. So I'd imagine those close to the Beyond Meat facilities are going to be the ones that benefit from it and are going to be very interested in, you know, a value added product locally for them.
That will help me narrow my research a little bit. Okay.
Yeah.
So you talked about the tariffs and the tariff wars and stuff, and the effect on commodities and everything. And I'm just taking a look at it. In commodities, they go one way until they stop going. And corn here, holy mackerel, it hits. I don't even know what year low it was, but we've had a really nice rally here. And I'm just thinking, how many times over the years have you seen these kind of rallies? I'd say since 2013, and they've just, you know, they've just petered out. What are you thinking about this one? I see corn got up to almost $4 yesterday here, pulling back. What was the catalyst for the rally? And is this corn rally on for real?
Yeah, this is a for real rally, I would say. The last few years have been kind of one of those things where folks have liked to say, oh my gosh, we're experiencing a crop failure, or we're not going to produce a crop. You know, it's absolutely terrible out there. We just don't know what we're going to do. And the reality has been that we've made a crop. We've actually made a record crop, I think 5 years in a row now, talking corn specifically. This year, though, is a different ball game. We like to plant between about middle of April. By the middle of May, most folks across the Corn Belt like to be done planting. Now, middle of May can drag into the end of May, and you're still okay from a production standpoint. But once you drag beyond the end of May, you really start to talk about, okay, making planning decisions. Farmers buy crop insurance, obviously, to help protect them from perils that can take place and result in production losses or zero production or something like that. So there is crop insurance that they can buy. Prevented plant coverage is what we call it. And we're getting close to those dates now where folks are going to have to start to make a decision. They either will take the prevented plant, which means they get paid 55% of the insurance policy that they bought. So they only get paid for about half of what would be a normal crop for them. It's basically created just to cover land costs and maybe some of those chemical costs that are added in, and maybe give the farmer a little bit, a pat on the head. All right, try again next year. It's basically there to make sure that they don't, if they can't get a crop in, they don't, completely lose the farm on it. It's not there to be a moneymaker, which is a really big misconception in the market structure right now. So we are working our way towards those dates. And the problem is right now is if you look at the rainfall that we've seen over the last 4 to 6 weeks, we've had the wettest 2019 on record so far. I think the last half of last year or last quarter of last year was also very wet across the Corn Belt. So we have extreme topsoil moisture, extreme subsoil moisture. And the problem is a lot of times if we have those extreme top and subsoil moisture levels and we dry out just enough to get the crop in, it makes for a record crop. And that's what we've seen. We saw it in 2015. We saw it in 2013. This year, though, we're not drying out. If you look at the rainfall totals that we've seen combined with the rainfall forecast now through June 6th, there is a true concern out there that we will not get a good portion of this corn crop planted. Right now, there's an estimated 47 million acres of corn that's unplanted, which typically by this time we would be down to about 5 to 10 million of unplanted corn acres. We'd be about 90% planted, which this year would be, it would leave us with about 9 million of acres unplanted. So it's definitely a valid concern as to what is taking place out there. And the market is starting to really pay attention.
The dogs are barking. The dogs are barking.
Everyone's losing their mind for a second.
That's okay.
Okay. All right. So the weather is a big factor. I should have thought about that. But Spencer has some really good question for you. I've taken this. Go ahead, Spencer.
Well, I guess I'm just curious because the last time we had you on, and I don't even think this was on our radar. Do you do anything with cannabis now that the laws have changed so much?
No, not yet. It seems to be a very privatized sort of industry at this point in time. Here in Michigan, we're just trying to figure it out. We voted it in. It's legal now as of it was voted in November. I think there was like 3 weeks, and then we're still working on establishing storefronts and what that looks like. A lot of towns and villages are still trying to decide what exactly they will allow or won't allow. A lot have determined whether or not they Grand Rapids has embraced it. I believe Lansing has embraced it. But beyond that, there's still a lot of uncertainty as to what that'll look like. Obviously we've seen a lot of cannabis companies in Canada grow and develop and flourish, publicly traded ones. Not really seeing that here just yet. Although I joke quite often on Twitter that I'd be interested in establishing a pot futures market, but we haven't really seen it get to that level just yet.
Are you back in Michigan? I mean, I know you're from Michigan. Are you back in Michigan?
Yeah. Yep. We're back in Michigan. We came back just ahead of Labor Day, so we're back and so that's hence the different office versus where I was before. So
that's great. I didn't. Oh, so you guys moved back to be closer to family. Well, that's fantastic. Let's just finish up real quickly here with some of the other commodities here. I don't think we're going to see beans in the teens at all here. That's had a little bit of a rally, but that's fallen back. Is that as susceptible to the weather and the growing conditions? Because it makes a lot of sense, with the corn here. Looks like soybean had a little pop, but falling back to a little bit of support. Just talk about soybeans and in general, soybean oil, soybean meal, pretty much same fundamentals there.
soybeans really are, right now at this point in time, from a fundamental standpoint, stocks to use ratio, things of that nature, there's absolutely zero reason they should be trading higher at all. But soybeans can, because they can. So obviously there's been a lot of focus on soybeans just simply because of the Chinese tariffs, and what, what's been taking place with that trade war and things of that nature, which obviously we have seen a significant cut in exports based on what we have grown to expect with our relationship with China. The thing that we're really seeing, though, is that China is backing off on imports as a whole because of the ASF situation, that African swine fever that is decimated their hog population. So they aren't feeding, they don't have as many mouths to feed either. So it's kind of a double whammy, you could say. It's easy to point to the trade talk and say, well, obviously, if we wouldn't have been in this trade war, we wouldn't be in this situation with soybeans. But we had grown to overproduce. We've overproduced soybeans. The price had stayed strong when other prices had fallen off for wheat or corn or something of that nature. We'd really kind of grown to expect this massive growth in Chinese demand would continue year over year over year over year. That's not happening. I mean, we didn't anticipate. We knew that the trade war could come. We had heard that. We had kind of been preparing ourselves for something like that for quite some time, at least since the 2016 election in my mind. But, the idea that we would see this unprecedented hog disease spread and reduced supply was something that was unexpected. So it's kind of a double whammy on soys. But the result, or the reality is, what we're looking at right now is, and I've said it quite a few times, you can't be bullish corn based on planting delays, because typically you'll put soybeans in if you can't put corn in. But the fact is, we are looking at like I said, an unprecedented situation when it comes to rainfall and projected rainfall. And so the potential really is there that we could see a reduction in expected plantings. Now, you can plant soybeans across much of the Corn Belt until about the 4th of July. So obviously we have a lot of time left. And so soybeans are actually probably going to see an increase in volatility, even if corn trades higher. The other factor in that is typically corn and soybeans have a ratio they trade about 2.4 to 1. So, you get 2.4 bushels of soybean or of corn for every bushel of soybeans. And so you're going to see the market fight that too. What does a new ratio look like? Do they trade independently of one another if they have two different fundamental situations, or do they stay kind of hand in hand? And so there's going to be a lot of questions about soys. On paper, they look like they should trade substantially lower than where they are right now, but there's a lot of factors that are going to contribute to keeping that volatility in place. Another one being the fact that they've been the moneymaker. If you've been wanting to bet on any type of commodity, grain, soybean, wheat, something like that, soybeans have been the one that have made the money for most of the traders by going long here over the last few years. And I think that you'll see that, kind of stay in the forefront of their mind as well.
And just finally, the land ETF here for farmland. I mean, it had a nice move up from 2016 to from the $7 level, kind of stalled at 14. Is it something that you follow at all? I mean, they're not making more in land.
No, they're not making more land. So that's something that is huge. However, what does the profitability look like on the land that they've bought? So I go back and forth on all of those companies that are investment companies. When it comes to land, obviously there's a great intrinsic value that will always remain in place when it comes to ownership. The struggle is going to be who farms it, what kind of values can you get from a rental situation, what does your ROI look like when it comes down to spending $7,000 an acre on ground, like in Michigan. I mean, they've come in, there's been certain companies that have come in and spent double what they should, just simply because they haven't necessarily researched what the ground is capable of. And so, nothing can protect you from poor investments or an inability to really turn a profit on your money. And so that is something that we're definitely, you're going to have to watch. But, the idea, what you said, they're not making any more land is really the foundation on which you can lay the idea that they should be a profitable company on.
We've been on the line with Angie Setzer. She's a vice president of grain for Citizens Elevator here in Michigan. Great follow on Twitter, the goddess of grain. She likes to comment on a lot of different sides. lot of different things besides the grain market. Angie, it's been way too long. Say hello to the king of corn and the little one there. And how far are you from Detroit? Did you move back to Charlotte, Michigan, or are you somewhere else?
About an hour and a half. Not very far at all.
We'll have to get you in here to the world headquarters soon.
Definitely.
Thank you, Angie. We'll talk to you soon.
Thank you. Have a good day.
All right, S&P futures had that little blip when we were on here just before the imbalance. It's got to 48 and a quarter, but that just looks like a little trigger. Someone got a little trigger happy there in that Mnuchin headline. So we are 6 points off the low, 5.5, 6 points off the pre-market low at 48 and a quarter. I enjoyed a little bit talking commodities and stuff, and I just tried to apply it to the stocks a little bit. Triple D, are you banging some trades out there during that interview?
Yeah, lots of headlines. If you're wondering, a couple people wondering what's going on in Sprint, wow, we always say, and
this is the most messed up merger of all time.
When you get those profits, and you saw that big pop up that day and it got up to 787 and they were thinking this deal was a done deal, it was anything but a done deal. We've saw this saga go on for years. Now at 8:07 this morning, the DOJ staff recommends blocking the Sprint T-Mobile deal. They said they're still up to a month away from deciding on it, but the recommendation from the staff was to block the deal. That is why Sprint has now given back 2/3 of those gains from just 2 days ago when we talked about maybe ringing the register. And T-Mobile has given back all of the gains. AT&T and Verizon, the big pops that they have, are now gone. Verizon's down 50 cents in the pre-market on this news here too. So, I mean, ring the register when you can, because this saga has been going on so long, it just wasn't likely to be a smooth ride.
John Legere, the CEO of T-Mobile, tweeted, this is what, Monday? Yeah, this is Monday, said he couldn't be more optimistic on Monday.
Sold to you.
Yeah.
Who said that?
John Legere, the CEO of T-Mobile.
Yeah. Anyway, so it's back down. So, I mean, you get back down to low sixes, maybe that's when you take a shot here. I don't know if it's going to get that low, but, if it starts to look like it's not a deal. The one people, and there was one analyst on CNBC saying, if this deal does not go through, and this is the wild card, if this deal does not go through, the one analyst on Sprint was saying that this could be a zero. I don't know if that's the case, because I've never analyzed the companies, and I think that's above my pay grade to sit there and really jump into that analysis. But he was saying it's like a $10 stock if the deal goes through, and it could be a zero if it doesn't. I don't know. So there is some risk. So if this deal does get blocked, don't think it's just going back to 6 or 5 or 550. This could be much lower than 550 if the deal actually does get blocked. So it's not a slam dunk to just say, okay, it comes back to 6. I'm going to buy it there again, because there is the risk, obviously, that this deal, this could be a lot lower. Sprint needs T-Mobile more than T-Mobile needs Sprint.
All right, Qualcomm strongly disagrees with the FTC ruling. Will seek immediate stay. Appeal ruling.
Figures.
Yeah, 6.6 million shares have traded in this one. 69 is where you're trading at. I mentioned this before. If you're holding this short-term trade, boom, you want to see it get down to 67, take out that pre-market low, and find some buyers here. I think the longer it takes to get but if it doesn't take it out, I think you can have to buy on strength instead of weakness. And just think about all those people. I don't know who it was in the chat. It has a 77, 76, 75, 74 puts. Pretty big windfall, especially if you have the weeklies or something. You paid up for all that premium, and now you have it. So we'll see if any shorts are coming in to cover, because this is really, since it had that gap and go, really squeezed people, and it did pull off a little bit. With the Huawei and that news that we had. But anyways, we got 7 minutes left, and we haven't covered another disaster earnings stock.
Nordstrom? Yeah.
Lowe's. Which one do you want?
Lowe's. I think it was Ben Graham who said, if you cut your fiscal year guidance, you're going to have a bad time. And that's what Nordstrom did yesterday after the close. I'll give you the numbers for their first quarter. EPS 23 cents versus a 43-cent estimate. I don't even know if that's comparable. Sales
Probably is.
He probably is. Sales $3.34 versus $3.57 billion. So they missed on both the Q1 numbers, and they cut their guidance for the fiscal year EPS. The low end of the range was $3.65. Now it's $3.25. And their sales guidance for the year up 1% to 2%. They lowered that to being down 2% to flat.
This is a disaster. And I said on a little bit of egg on my face because I said Nordstrom, the bar was really set low. So I said if they say anything, even remotely okay, the stock is likely to rally. But they did not say anything even remotely okay. That was a disaster report. I don't care how whatever, how low the bar is, they went below that low bar. So if they, were in a limbo competition, they would win because that bar was really low and they somehow got under it. So, but they're not, and obviously not good news. JWN already traded 400,000 shares here this morning. It's down 10%. Stock is ugly.
If you've been waiting to buy this stock at 33.5 since November of 2010, this is your opportunity. We've traded down to that level in the pre-market trading, currently trading at 33.79. Let me give you your pre-market low here in JW Nordstrom. Let's see, pre-market low. You came down on the spike to 33.52, and then you just got someone trying to bring some stock in. 33.40 has been the lows since that. So someone else is keying on that low from 2010. So there it is, but not really bouncing out of here. Only 30 cents off that low. You got to figure there's probably a little bit of sell stops in there. And maybe if you want to not be a hero today and wait a couple more days, 31.07 was your October 2010 low.
Kramer with a good call on lows. And we're going to get that report here right now. But Kramer said going into the report, he's like, the weather's been terrible. It's probably not good news for Lowe's quarter. And, that makes sense. I mean, you're not doing as much, of your own home renovations when the weather rains every day or it's been really cold. So anyways, he said that could weigh on the quarter. And I believe he said it with Lowe's. I don't think it was Home Depot. I think it was Lowe's. Anyways, he's right because the stock was down $10.
Yeah, the Q1 adjusted EPS $1.22 versus $1.34 estimate sales of 17.74 versus $17.7 billion. So a slight sales beat, but an EPS miss for Lowe's in the first quarter. Same story though. They cut their fiscal year guidance. This is the fiscal year EPS guidance from $6 on the low end to $5.45.
Down $10. It's getting the beats. You do have some levels. I'm going to go to the March low, 97.55. I think you've come this far. Why not hit a few stops under $100? Maybe this is one where it dips under 100 quickly, and then if you can get back up over it, maybe it's interesting. Again, you're buying, it's a seasonal to a certain extent. So I don't think this is like the same story where Lowe's has got some problems going on here and this is a bigger issue. I think it's a seasonal thing, and that's why I would be more inclined to buy a dip in Lowe's than I would in something like a Nordstrom, which is, I think, bigger. They have bigger issues.
People just start shopping there no matter what it is. 99 is your pre-market low. You are a couple bucks above that. A couple lows at 100 are just under 99.43 and 99.99. So I don't know. And also, just a note here, I've seen this thing do some crazy things on earnings days. And I can't remember when it was, but I remember one day when it was like down 5 or 6 and ended up 5 or 6. I can't remember when that was, but this stock.
I don't think that's going to happen.
No.
I don't think I'm selling. Intel reported it was a good thing to sell short the next day on that, selling it in the hole. With 3M, it would have been a good thing. I don't think I'm doing it in this case. I think I like that, $99, call it. I kind of don't mind that, as a possibility.
Okay. All right. S&P's bouncing back here, 28.50, down 11.5 handles. We're almost back at mid-range on the session. That's 28.59. So that'd be a nice target on the upside if you're holding along. And you just got to think with this 20-point range so far, kind of going up in the middle. I don't know if you're going to have your high and the low for the day in and the after hours of pre-market trading. Just keep in mind, too, that, we do have a holiday coming up on Monday. The markets will be closed. So, a little bit of holiday trading coming up on Friday. But just taking note of that, see if we can get back over 28.60 here in the S&Ps.
What about Toll Brothers? We didn't cover this one. And this is very interesting because you know what? That quarter was pretty good. And they hit it anyway. It was up, it was trading up, and they hit it.
numbers on Toll Brothers from yesterday. The Q2 EPS 87 cents versus a 75-cent estimate. Sales of 1.7 versus 1.54 billion dollars. So they beat both numbers in the second quarter, and they gave some Q3 delivery and fiscal year delivery guidance as well. But it was a beat for the quarter.
It was a decent quarter, and it was up for about a half an hour on this news, trading the upper 39s. I actually tried to short it a couple times just because I thought 40 was going to struggle to get over there. I just couldn't get lifted. I was like, I'm there, and then I'm trying, and other people too. Like we're all trying in the upper 39s because we know 40 is big. So I tried it a few times, trying to play with the potential downside of it. It would have been good. I just could not get filled. So I never did get it and never got up over, what was the high, 39.80 or something, Joe?
40. I don't know when you
No, it got higher than that. It got higher than 40. Look closer.
I
saw it higher than that. I was trading and it almost got me at 39.80.
Okay. You might have canceled because maybe someone else can clarify here.
No, I'm pretty sure it was higher than that. If you actually,
I bet you on my TradeStation platform, I'll bet you, let me take a look at 3 steak dinners on my TradeStation platform. It didn't trade over 40.
Didn't trade over 39.40?
It traded, 40.
39. No. What was the high? I say I was at 39.80 and it couldn't get me. Like 39.85. Was it right in there?
I see a high of 40. That's
you do see 40.
Yeah. I thought you were saying 39.40.
Yeah. So, anyways, I must have been after. I probably did. It was probably going straight up, and then I probably canceled, and then I probably came back out. I was probably after the 40, so maybe it hit 40 off the hop. Yes. I didn't notice that, but I was trying again. Multiple people were trying. So I guess if you were out there on the initial print, you probably got it, but I obviously wasn't. So. Anyways, I didn't get it. Wish I would. Stock is down significantly. Obviously, wouldn't have held it this long because we know scalper in me. But anyways, it would have been a good short up there. I mean, it's hard. When you come into these big levels, they really got to blow it away to go through it, and it couldn't. And then it started leaking, and then the other people, and it starts going red, and then there's people nervous. Just because the stock has a good quarter doesn't necessarily mean it's going to go higher. It's been a tough market. Tough earnings season. I mean, the market itself has held up okay, but there has been a lot of little individual disasters in this market. NASCAR to acquire International Speedway ISCA for $2 billion right now, breaking.
There's got to be some antitrust stuff regarding that.
ISCA, I'm going to get you the price. I'm just going into the release here right now, trying to grab you I have $2 billion on the initial headline. I don't see a price. $45 in cash.
Nothing.
So ISCA. Congratulations, the stock. What 45? That's it? Wait.
Yeah.
It's closed at 44.10.
I know.
That's a crappy premium. Was this rumored?
Nope.
Because the stock hasn't really been moving very much. Maybe this was already out there or something. It looks like this had to be rumored. Look at the weekly chart. This has been kind of hanging out there forever doing nothing. This must have been already out there.
Maybe was there a rumor back?
See, back in October we blast off, and we've been kind of just hanging out doing nothing since. Maybe this was already on the table. Because I tell you, otherwise, that's a pretty crappy premium of $45.
Yeah. And what's the symbol of the stock taking over?
It's NASCAR. It's not
NASCAR. NASCAR. Private, okay. Yeah. All right. Oh boy, we really kept Spencer.
Overtime
here. He has a lot of work to do.
How is this not an antitrust concern? Whatever. That's an argument for another day. But I feel like this.
What's Roger Penske stock?
Yeah, PAG. Oh, wow. Brent is good. PAG.
All right, I'm just looking. I don't know.
All right, cool. Well, on that note, that'll do it for our show. Thanks to our guest, Angie Setzer. Thanks to all of you who enjoyed our chat rooms on YouTube and premarket.benzinga.com. If you missed any part of our show, our podcast is available on iTunes, SoundCloud, Stitcher, TuneIn, Google Podcasts, or just rewatch our show on YouTube. Reminder about the upcoming Benzinga Trading Summit, June 20th at the Sheraton Times Square in New York City. I will be there. Joel will be there. Dennis will be there. Who else? Jeremy Newsom, Henry Band, Todd Gordon, a bunch of traders. Wendy Tilson going to be walking through their strategies.
Kenny Glick.
If you go to bzprofit.com, enter the promo code PMP, all caps, PMP15, that'll get you 15% off any ticket, including to the exclusive trading lounge. That's it for our show today. Everyone have a good rest of your day, and we will see you on Thursday.